Shares rocket on an Afterpay surge. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Got my stein of coffee. I thought we'd have a look at this article from the ABC discussing the share market surge that we saw yesterday. And, well, the strong growth in Afterpay. Now, before we go through this article, let's jump over here to trading economics, and we can see the ASX 200. As I'm recording this, it's 7:30 in the morning, and the market hasn't opened. But you can see we had a huge plunge that was very exciting for everyone, down to 4,500, climbed back up, shot over 6,000, dove back down, and now we've breached 6,000 again. But Afterpay, an interesting business. Essentially, I call it hipster lay-by. You know, you can buy something, take it home, and pay it in interest-free payments over a period of time. It just means that the interest is being absorbed by the seller. So they'll put the cost of their goods up to absorb that, and Afterpay will get that cut. That's the thing. We all suffer for it because they don't want to make everyone realize that they're paying that cost to Afterpay. So they make all of us paying cash and everything else pay more. You know, it's a brilliant business model. You know, it's good. I've got no issue with it. It's just sad that people are depending on it. Let's look at the 1 month price. It's gone from $50 up to $68. Let's look at 6 months. I mean, there you go. January, Feb, it went down from Feb in March. What do we have? From $39 down to $8.90 in March, up to $68. Bloody hell. So if someone bought them for $8.90 a share in March of this year, you've made $60 profit each one. Has anyone done that in the comments, guys? Let us know. I know some of you are fans of Afterpay. Some people were getting it in the IPO. I mean, there we go. If we go further back, $2.95 up to $60. An Australian success story, or a very sad sign of where things are going. You know, you can Afterpay everything. I met a gentleman the other day. He sells, masks for people who are snoring, like CPAP machines. He has Afterpay. My dentist had Afterpay. It's the world we're living in, guys. Damn, I mean, even the March growth, that's people asking for good news. Here you go, guys. You got good news. You got good news. Look at that. Look at that. The Australian share market has risen strongly as the local technology index hit a fresh high, driven by a rise in Afterpay shares. The ASX 200 closed 1.7% or 98 points higher at 6,032 points. The major bank stocks helped lift the market, led by a 2% rise in ANZ shares. The ASX 200's Information Technology Index rose 3.7% to a record high, as shares in buy now pay later company Afterpay surged after Citi raised its price target on the stock. Shares in Afterpay closed 9.5% higher at $68.16, a new high, while shares in competitor Zipco gained 5.7%. Elsewhere in the tech sector, shares in Appen and WiseTech Global rose strongly. Retailers were mostly stronger, led by shares in outdoor outlet Kathmandu at 9.3%. And I'm a big fan of Kathmandu. I think I'm actually wearing some Kathmandu clothing right now. Perhaps, as of today, Queensland, our market or our freedoms are increased, so you're going to have more and more people getting out there. Maybe I need to take the kids for a hike. In a market update, Kathmandu said retail stores and online sales had generally exceeded management expectations since stores began reopening as pandemic restrictions eased. The retailer said most of its stores were now reopened, with one exception being airport stores. And Victoria is still out and about despite the hotspots. With a number of Melbourne suburbs locked down due to rising cases of the pandemic, some businesses in affected areas have been forced to shut again, and supermarkets have brought back limits on toilet paper purchases. Is diarrhea even a sign of this illness? Why are people stocking up on toilet paper? Didn't they buy enough already? However, economists at ANZ have looked at a number of different indicators and say they show that Victorians are still largely out and about for now. Although infection numbers spiked quickly in Melbourne, the impact on behaviour appears limited at this stage, they said. I think people are over it. They're just going to take the risk. Restaurant bookings in Victoria over the past week were down 17% compared to the same time last year, but it was an improvement on the previous 3 weeks, which saw bookings around 36% lower. Though the recovery in Victoria's restaurant bookings lags the other states, the degree of lag didn't materially increase through the latter half of June as Melbourne's case numbers increased, an ANZ economist said. Melbourne's CBD foot traffic on the week ending of June 27-28 showed no discernible difference compared to previous weekends in June. Nationally, restaurant bookings have recovered faster than overseas, which ANZ economists said was indicative of Australians' desire to return to normal. And I think we all want to return to normal. I mean, what's the first thing that you're doing? Has your life changed drastically? I think I'll have to take the kids for a hike, or at least just a couple of them. Go for a bushwalk. I mean, there can't be a risk. If anything, that's one of the safest outdoor activities you can do. Only problem is it's so bloody cold. And cold in Queensland is like 20 degrees. However, it does appear people have reconsidered plans to travel to Melbourne. Google searches for Melbourne hotels fell sharply last week, while searches for Sydney hotels continue to rise. So Tesla overtakes Toyota as most valuable car maker. That's just insane. That is just insane. I'm going to look up the Tesla share price. $1,208. Let's look at their... there you go. Look at their 5 years. Have they made a profit yet? Has Tesla made a profit yet? I think Toyota's made a profit. And I've got my nice Toyota Camry hybrid. It's brilliant. I love it. During the US session overnight, electric car upstart Tesla became the world's most valuable car maker. Tesla shares rose 5% to reach a market value of $210 billion, overtaking Toyota Motor Corporation as the world's largest car maker by market worth. Tesla shares have surged by 400% over the past year, and financial firm Riv-In estimates that Tesla now trades at 69 times estimated 2022 earnings. So they're trading at... What? That is insane. People are paying a premium for these shares. That is just crazy. By contrast, Toyota trades below 10 times earnings for 2022. Tesla has never made an annual profit, but it is a market leader in electric battery and storage technologies. Yes, but is that a moat? Is that a moat for their business that can't be overcome real quick? Do they have that much of a technology edge that Toyota or other manufacturers couldn't bridge that gap? Let me know in the comments, guys. Is it just the hype? Is it just the hype? Shares in the electric vehicle maker hit a peak of US 1,134 as demand for electric vehicles continues to rise. But they haven't made a profit. They haven't made... Don't you want to... I don't understand the world. It's clown world. The share market is clown world. However, Toyota sold around 30 times more cars last year, and its revenue were more than 10 times higher. Even Tesla co-founder Elon Musk may not agree with the latest valuation. He wiped $14 billion off Tesla's value in May after tweeting that its share price was too high. Shareholders have also been asked to vote to remove the eccentric Mr. Musk from the board. If they get rid of him, do you think it'll keep going? London-based advisory firm Pensions and Investment Consultants said Mr. Musk poses a serious risk of reputational harm to Tesla, especially because of his Twitter rants. He is Tesla. I think a lot of this is hype. It's hype. And the dream that he's selling. It's not to do with profit. It can't be to do with profit. There are none. It's the dream. He's selling the dream. Pizza Hut franchisee is in bankruptcy protection. Meanwhile, Pizza Hut's largest US franchisee has filed for Chapter 11 bankruptcy protection in the US, which allows it to trade its way out of trouble. NPC International operates more than 1,200 Pizza Huts and nearly 400 Wendy's restaurants. It's carrying a big debt load of about $1 billion. Why the hell is a pizza company carrying that much debt? The news comes despite the fast food giant reporting same-store sales growth in April and May, thanks to higher digital and delivery sales because of the coronavirus pandemic. However, so they're making more money, but their debt's just so high. However, analysts say Pizza Hut's owners, Yum Brands, could lose up to $54.2 million in annual royalty revenue. So the Fed considers low rates pledge as the pandemic spikes. The latest minutes from the U.S. Central Bank meeting showed officials think the U.S. economy will need support for some time. Federal Reserve officials indicated they would provide more guidance in coming months on the future path of interest rates and bond purchases. They also consider reviving a Great Recession-era promise to keep interest rates low until certain conditions are met. Do you think they can ever rise interest rates? Is it ever going to be possible? What happened the last time they tried to do it? The policymakers generally indicate support for tying interest rates to specific economic outcomes, a number were in support of a pledge to leave rates low until inflation meets or exceeds the Fed's target of 2%. U.S. stocks were mixed at the start of the third quarter as positive vaccine developments and better-than-expected manufacturing data offset concerns over a jump of pandemic cases. Stocks came off their highs after the U.S. saw a record single-day spike in virus cases and rising infection in California, Arizona, and Houston. California reintroduced some pandemic restrictions by banning indoor activities at restaurants, cinemas, and museums because of the rising cases. The World Health Organization warned that some countries may have to re-implement severe restrictions such as lockdowns to stem the spread of the virus. Shares in pharmaceutical company Pfizer rose more than 3% after medical firms said it was developing a vaccine with German biotech firm BioNTech. Pfizer told the market it had seen early positive results. U.S. listed shares of BioNTech rose as much as 18.9% before fading into the close and losing almost 4% of its value. So people jumped in, took profit, and jumped out. FedEx jumped 11.7% after posting better than expected quarterly profits and revenue, helped by a surge in the pandemic-driven home deliveries. So markets are mixed overall. The Dow Jones Industrial Average fell 0.3% to 25,735, weighed down by aircraft manufacturer Boeing. S&P 500 gained 0.5 to 3,116. The Nasdaq Composite added 1% to 10,155. The S&P 500 closed off its best quarter since '98 on Tuesday, fueled by unprecedented levels of fiscal and monetary stimulus. So it's money print to go brewer, guys. It's heading to the stock market. In economic news, the Institute for Supply Management said its index of national factory activity jumped to a reading of 52.6 last month from 43.1 in May, ending 3 months in a row of contraction, or readings below 50. The ADP National Employment Report showed U.S. private payrolls increased by nearly 2.4 million jobs less than expected in June. The latest U.S. job figures are out tonight, a day early due to Friday's July 4th Independence Day, with analysts generally expecting the unemployment rate to fall from 13.3% in May to 12.5% in June, according to Westpac economists. So, there we have it, everyone. The big player here in Australia, I think, is Afterpay. Did anyone get in on March? Have you written it up? What do you think the future is? Do you think the fact that a business that people use to make consumer purchases and avoid interest, is that really something to be proud of? Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from HeiseSays. You can support us using Gold Pass or via PayPal. Thanks, everyone. I'll see you next time.